We're seeing a short-term trend of the dollar weakening. What does that mean for your investment strategy? What investments do well when the U.S. dollar is declining? I got that coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Welcome to this channel. If you are new, hit that subscribe button, turn on notifications, and smash that thumbs up button. Okay, big credit here. I'm a fan of Ben Carlson, a wealth of common sense. He's a blogger, author, does podcasts, so I'm a big fan. And he came out with a blog post recently. It showed up in Fortune magazine, also on his site, A Wealth of Common Sense. We'll link it here. Basically talks about the short-term, the near-term decline that we've seen in the dollar, the weakness in the U.S. dollar. We talked a couple videos ago how that's actually helped gold reach to all-time highs. It's off a little bit of that today, falling below the $2,000 an ounce mark. But a weakening dollar tends to push gold prices higher. What other investment implications are there if this short-term dollar weakness turns into a long-term trend of a weak dollar? Well, check out these charts here. Very, very interesting how different types of investments, different asset classes tend to perform when we're in a period, a prolonged period of dollar weakness. First thing that jumps off this page to me is not the thing that's going to jump off the page to you. Look at U.S. stocks. Look at U.S. stocks. When the dollar is strong, U.S. stocks do great. When the dollar is weak, U.S. stocks do great. Now, this is over the past 40, 50 years, so certainly you wouldn't say that's permanent. It's always going to be that way. But my goodness, even in the bubble that we're in, we're going to talk about that soon, whether this is a bubble, what you should do about it. But despite what's going on right now, U.S. stocks are the place to be always. In the short term, maybe not. But over the long term, absolutely. When the dollar's weakening, U.S. stocks do great. When the dollar's strong, U.S. stocks do great. But you can't say that about the other asset categories. When the dollar is strong, gold isn't. Now that's interesting. When the dollar weakens, gold tends to do better. So if this short-term dollar weakness turns into long-term dollar weakness, gold should be a good asset class as part of your overall investment portfolio. But we talked about that in a video last week. What's surprising is international investments in emerging markets. It's not surprising to me, but it might be surprising to you simply because international investments, emerging markets, have underperformed U.S. stocks for a significant period of time. We're talking 7 or 8 years. Now, just to remind you, the 10 years prior to that, international emerging markets outperformed U.S. stocks significantly. It wasn't even close. And so everything is cyclical. But if this short-term period, this short-term trend of dollar weakness turns into a longer-term trend, if that continues, we should expect our international investments and our emerging market investments to finally be adding some extra benefits to our portfolio. So what's this mean for you? Couple applications. Number one, all investments are cyclical. They just are. So be careful not to put too much of your investment approach, have too much of your investment strategy relying on near-term, short-term financial conditions. Now, I know we're talking about in the short term, the dollar has been weak. I don't know if that will continue for the long term, okay? So this isn't advice. I would just tell you everything is cyclical just purely looking at the past 40, 50 years of this data. Second, be careful of abandoning international and emerging market investments. I'll be the first to tell you, they have been terrible. They have been terrible. And if you were to overweight or underweight, you would hopefully have not been overweighting international and emerging market investments over the past 5 years or so. Should you be overweighting them in the future? Well, I mean, valuations look better than they do in the U.S., so there might be more upside potential internationally, but there's a lot of challenges internationally. If we do see a weakening dollar that will continue, that trend continuing, international emerging market investments should do better simply by the exchange rate. Third thing that I would tell you is be careful about jumping on the bandwagon with gold. We talked about this recently, but gold, the price of gold is more of a speculative play. There's no mathematical way to derive what is the true price of gold. Now, I can tell you, we'll talk about it likely in an upcoming video, mathematically I can get to, hey, the stock market should be worth this and it's worth this, right? Or it's worth this. I can and at any given time, I can tell you it seems like the fair value of the market's here, but it might be priced higher or lower, okay? And you've got to wrestle with that. But with gold, I have no idea. There's no way for me to price in, all right, let's do this formula. Here's what gold should actually be. So I'd be careful, even though the information, the data suggests gold should do better during a weakening dollar. We don't know if that trend will continue, and I would be careful about putting too much of your eggs in that basket. And the last takeaway I would suggest is, again, let's go back to how U.S. stocks do during a weak dollar trend and a strong dollar trend. They've both time periods, in both circumstances, they do great. So mixing this all together, work with your certified financial planner. Make sure that you've got a diversified investment approach of low cost investments that fit with your overall financial plan. That is the secret, not trying to assimilate, hey, how do I take this information and apply it to my near-term portfolio decisions? No, make sure it's connected to your overall financial plan. You're taking the right level of risk to meet your long-term financial goals. And then I would encourage you, have a momentum strategy on top of that, because short-term momentum plays a big role. We're seeing that right now with tech stocks. We're seeing that right now with stocks in general, right? I've been doubting this rally all along, and here we are, likely to hit all-time highs today. So work with your certified financial planner. Make sure you're taking all this information in context, but that your overall investment decisions are connected to your long-term financial plan. You don't have a CFP, you can always contact one on our team. You can find us online, korhorn.com, that's Korhorn with a K, or find us at wisemoneyshow.com, or you can always send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.